Hello and welcome to Startup Street. I'm Arundathi Ramanan, and with me are Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. Cred-owned Happy slashes 35% of its workforce as part of a restructuring exercise. Happy to give impacted employees 3 months' salary along with an extension of insurance coverage and some other additional benefits, say reports.
Developer-focused startup Stack Overflow lays off 58 employees to focus on profitability. The firm's top boss says the layoffs were the result of Stack Overflow taking a hard look at its strategic priorities for this fiscal, plans to invest in continued growth and pursue agility.
Farmeasy suffers valuation markdown for the second time in less than a week. US-based investor Janus Henderson cuts valuation to $2.8 billion from $5.6 billion. Just last week, Neuberger Berman cut the online pharmacy player's valuation to $4.4 billion.
Fintech firm Empower gets $150 million debt financing from Goldman Sachs. The funding will be used to amplify the loans issued to students attending over 400 colleges and universities across the United States and Canada.
Puma India head Abhishek Ganguly bags 430 crore rupees for his new venture, Agilita Sports, in its first round of funding. Ganguly is leaving Puma in August. Harsha Raghavan, a former Fairfax India executive, invests about 400 crore rupees in the new venture.
Well, those are the headlines we've been tracking for you this evening. First up on Startup Street, the Karnataka High Court last week revoked a goods and services tax notice against Bengaluru-based online gaming company Games Kraft Technology over an alleged invasion of 21,000 crore rupees. Earlier in September 2022, a GST intelligence unit alleging the firm failed to pay rupees 21,000 crore rupees in GST issued a show cause notice to Games Kraft Technology. This was the biggest such claim in the history of indirect taxation, and it was for the period between 2017 and June 30, 2022. Joining me now is Games Kraft Group's General Counsel, Shruti Mishra. Also joining us is Roland Landers, the CEO of All India Gaming Federation. Shruti and Roland, many thanks for joining us on Startup Street today. Shruti, coming to you first. Big relief for Games Kraft, and like I said, this was the biggest such claim in the history of indirect taxation. What do you have to say about the verdict?
Firstly, thank you for having us, on the show. On the verdict, certainly relieved, as you say, but very, very happy. We always had a lot of faith in the judiciary and the way the government has been functioning. So we were fairly confident that, that our business model will be vindicated. So we believe that's exactly what has happened. So certainly very, very happy with, the way the verdict has turned out.
Okay. Shruti, Games Kraft was also accused of promoting online betting through cards, casual and fantasy games like Rummy Culture, Gamesy and Rummy Time. Now, the officials had alleged that the firm was not issuing invoices to customers. What has been your stance on this?
So I think, we were very clear that the Indian jurisprudence is fairly clear in relation to game of skill versus game of chance. What Games Kraft is involved in, and all our platforms are skill-based gaming, and therefore we were not betting or a gambling platform as is understood under Indian laws. And that has been the stance that we have taken, and that has been the stance that has been judicially interpreted for over the last 60 years, and that is exactly what the Karnataka High Court has also held in this particular matter.
All right. Roland, coming to you now, the argument on skill-based versus gambling has been going on forever. Do you think this verdict will also help tackle this issue?
Yes, indeed, it will. We believe that, as the apex industry body, which has been trying to dispel the perception that has been prevalent for so long, in my about 8 to 10 years in the industry. So we believe it's a landmark decision by the Honorable Karnataka High Court. And this will go a long way in dispelling, and as Joy said, this is reiterating what has been already said by the Supreme Court and the various high courts. And it has been consistent over the last 60 years that any online game of skill, whether played for money or not, is not tantamount to betting or gambling. So that I think has been very, very clear. And this will go a long way in also, in dispelling this perception that has been
Yes.
to a large extent now mitigated, to a large extent, made clear. But whatever little shred of doubt is there would get dispelled by this judgment.
Okay, so a lot has been mitigated here. Roland, also the GST Council still has not made a final decision on levying the industry with the 28% tax versus the 18% that the industry wants. So also the key question that remains is whether the levy of tax will be on the gross gaming revenue or the total compensation. Your thoughts on this?
No, it will be on the gross gaming revenue. I mean, we've been able to have the opportunity. And I must mention here that, as the IGF, we had the opportunity to meet with every member of the GOM that was set up with the FinMin members also. And we laud that, the mechanism, the approach and, the consultative process that they adopted, which helped us put forward our case both on the rate and the valuation. So we firmly believe that, this sunrise industry that has been earmarked as being a key contributor to the $1 trillion digital economy as set out by the Honorable PM. I think it needs the support, and it will get the support both in the rate and valuation. So I believe that there is no doubt that the valuation will be on the GGR and the rate of 18%.
Okay. My next question is for the both of you. If you could take me through some of the conversations that you've had with the council or gaming companies have had when they met the council. What is the road ahead for the sector? Joy, if you could go first.
Sure. I mean, I think, Roland would be best placed to sort of discuss in relation to the conversations with the council. He's been at the forefront. But just from our perspective, I think I just want to say that some fabulous work has been done by the government over the last few months. We should not forget that. Some absolutely great policy work has happened in relation to the gaming sector, whether it's by MeitY or even by the Ministry of Finance when it sort of relooked into the entire TDS provision. So we, at least as a company, are very hopeful that the same positivity will continue, and we will see regulations even on the GST front, which are, going to be definitely giving a fillip to the sunrise sector and industry. And I'll leave it to Roland to maybe take you through some of the deliberations he's had with the members.
Roland, go ahead. What conversations have you had with the council and the other gaming companies?
Yeah, so, the discussions we've had, as I mentioned earlier, have been very, very good, very positive, very upbuilding. Both in the direct taxation as well as in the indirect taxation. We've had, ample opportunity to put forth our representations. And, I think what will come out finally from the direct taxation. Also, I believe that this is clearing the way, starting with the MeitY rules to the taxation side. This clarity between online gaming and what constitutes betting and gambling is being made clearer and clearer. So I think that would move forward.
Yeah.
And I must say that, that given the fact that, this sector has been marked to be a key contributor, I feel that, finally the GST Council also would determine the rate and valuation as per the AIGF and the industry.
Okay.
Yeah.
All right. We've completely run out of time. Many thanks, Roland and Joy Jyoti, for joining us here on Startup Street. It was a pleasure talking to the both of you.
Thank you, Shruti.
Thank you, sir.
Well, Stride Ventures has announced the first close of its third venture debt fund at $100 million. The venture debt fund is targeting a final close of over $200 million for the third fund and is going to deploy this to meet the debt requirements and global ambitions of Indian startups. Now, Stride Venture Capital has sanctioned more than 5,000 crores in the Indian startup ecosystem to date and has distributed over 100% of its commitments to early investors of its Fund 1. So for more on this, joining us now is Ishpreet Singh Gandhi, who is the founder and managing partner at Stride Ventures. Also with me is my colleague Arundathi from the Mumbai studio. Ishpreet, welcome to Startup Street and thank you for your time here on CNBC TV18. Start by telling us about this third fund that you're targeting at 200 million. Firstly, when do you hope to achieve the final close and where are you hoping to deploy it and at what stage?
First of all, thank you for having us on the show. It's always a pleasure to be back on Startup Street. So interestingly, we've got a license in January this year. So doing a first close within 4 months of the license, which we have achieved, I think it's a great validation of what we are trying to achieve as a brand Stride. We think overall that next 3 to 4 months should be the timeline for us to go towards the final close of ensuring that we are at least at $200 million. That's the endeavor.
All right. So in 4 months, we'll see the final close of it. Hi, Ishpreet, Arundathi here. Have you already identified any startups for investments? How many companies are you looking to invest in, and what will the average check size be at this point?
Yes, Arundathi, interestingly, if you see Stride's philosophy, we've been always, since our starting, we've always believed that debt is important at various stages of the journey. Interestingly, in your show today, there's been a lot of soberness towards startups in terms of the news which is happening. So credit has really picked up. And more importantly, if that's structured well alongside the businesses, the structured credit requirements within startups is fairly high. So we already started, in fact, we've already identified opportunities and deployments have started from Fund 3. To your question, specific answer, the amount can be anywhere from say 10 odd crores going up to 60, 70 crores, depending on what stage of the business we are coming, what kind of structure we are doing with the business. But we already started identifying a lot of opportunities and we see a fairly quick disbursement and understanding the current credit cycle. We see a lot of requirements coming in and we've started deploying as we speak.
Okay, but Ishpreet, what's really the investment strategy? You know, because as we understand, venture debt is something that startups really look at, when, they want to extend the runway, when the option for equity perhaps isn't there. So I just wanted to understand, are there specific themes you're looking at? What's your investment strategy going to be like to protect your investments?
Sure. And you rightly mentioned, actually, in today's time, it's important since venture capital rounds have got subdued. How do you maintain right kind of credit structures in order to make sure that the delinquencies are in check? So fundamentally, we believe in businesses who are the market leaders. What's happened, interestingly, is a lot of capital has flown into the startup ecosystem in the past, in 2020, late 2020, 21, and early 22. Now, when we entered Q2 of 22 calendar year, we realized that naturally the cycle is not as strong as what it was in the previous 6 to 8 quarters. So that's actually resulted in a lot of credit checks at our end in terms of various companies, that where they were positioned at that point of time and what kind of support they required. But more importantly, what we have seen through our journey since Stride Fund 1, that a lot of startups have got used to the fact that there are a lot of use cases of various business requirements. Working capital, capital expenditure, inorganic growth of acquisitions. There are a lot of use cases of different businesses which have started emerging. So our strategy or our investment strategy has always been around understanding businesses, funding market leaders, seeing what journey they are in. Typically, we do mid to late, right? So if you're doing early stage, since the investment activity is strong there, we've still found some scope of coming alongside venture capital. But mid to late is where we go deeper on our credit track record of ensuring that we understand businesses, their unit economics,
right,
where they're positioned, if they are at all closer to EBITDA positivity, at what stage they'll achieve that. Some of them are already starting hitting EBITDA positivity. So the point is that it's a combination of looking beyond founders, large investor base, deep capital base, and unit economics and the market in which they're playing. That's been a part of our core strategy.
Right. So mid to late is where you're looking to invest in. But just to take off a little bit more from that question, what is your estimate of the current demand for venture debt across Indian startups? Is a majority of the demand still coming from fintechs? How much of it remains unmet? And at what pace do you expect venture debt demand to grow at this point?
Sure, Arundathi. Look, if you see our deployments, it's been across sectors. We have not been only dependent on fintechs, while we have backed some of the market leaders. You see that strategy folding place in every sector. And interestingly, what we've realized, especially in today's time, the sectoral allocation is further getting diversified. So it depends on what what stage of companies they are in, what level of business they're conducting. Because we've seen a huge uptick of, so take consumer sector as an example. There was a lot of online impetus during COVID. So there was a lot of D2C in terms of talking directly to customer through digital forms. Now, all of them have gone into offline distribution. So that's actually require a lot of working capital to come in play in the consumer sector. Similarly, B2B businesses are largely have a very natural working capital cycle to fund. Fintech sector you spoke about, and other sectors like healthcare and agri-tech and education are seeing a lot of consolidation in terms of bigger companies trying to increase their market size with all available opportunities. So we've seen opportunities across. In terms of value of investments, we're very confident of saying being around 200 to 300 crores of monthly disbursement, which we have been doing. So there's a very significant uptick. As I mentioned, we have been quite cognizant. So this deployment is irrespective. We have seen 3x of the demand of this through top companies, but we've been very judicious about what kind of companies you want to back in.
We just have the final 10 seconds. How large will your portfolio be in the near term? 5,000 crores sanctioned so far. How much more?
Yeah, it's right. We've crossed 5,000. We believe it's $1 billion annualized business, which we'll be at soon. If you only speak about venture debt markets and Stride as another element of the business, if you only speak about Stride Ventures as a business, we see venture debt market close to $3 to $5 billion in the next 3 years. And we believe we can easily constitute 30% of market share. The way you've seen our market share increase since 2019, the significant opportunities of us combining our hands with some of our LP banks, doing working capital structures, doing new creative financing structures in form of structured credit, including acquisition financing, has seen tremendous demand. So we see that if you are able to, in the next 6 to 12 months, you're able to reach a 500-600 crores monthly deployment, which is annualized $1 billion of deployments in the sector.
All right, Ishpreet, on that note, we're completely out of time, but thank you so much for joining us here on Startup Street today.
Thank you. Thanks so much.
On that note, it is time for us to head into a short break, but coming up, can AI tools benefit the education space? We bring you a special report on the pros and cons. Stay tuned.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Film shoot. iPhone 14 Pro पे. Amazing camera, huh?
And cut! Hang on, director को भेजना है.
Beach से. कैसे? Those 4K videos are huge. यहाँ juice तो मिल गया. Wi-Fi कहाँ से मिलेगा?
Airtel 5G Plus तो मिलेगा.
So you've
already got it. Maybe you should get it too. Back up, guys!
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
As India makes strides towards sustainability, Tata Power and News 18 Network launched a unique movement that empowered India to make meaningful change. Sustainable is attainable, a path-breaking initiative with the aim of bringing people together to spark conversations around sustainability, demystifying futuristic technology to enable our society and industry to make meaningful change, to spread ideas that will reduce our burden on natural resources and build a society and a world where the environment can flourish. Join us at the Sia Fest, 17th May, New Delhi on News 18 Network.
I am slow. I'm a tortoise. But your wealth managers? They shouldn't be as slow, you know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back to Startup Street. Generative AI has the potential to revolutionize the edtech industry. However, it also has its limitations. My colleague Aishwarya Anand explores the pros and cons of AI as a tool in the education space. Take a look.
The promise of AI has been brewing for a while, but the space has been buzzing since the launch of OpenAI's ChatGPT-3 and the first iteration of GPT-4. One sector that has been keenly interested in the rise of AI is EdTech. From grading to customer support, innovative assessment methods and content creation, higher education and upskilling startups are working with OpenAI's ChatGPT and GPT-4 to improve their offerings. Global e-learning platform Coursera is integrating ChatGPT into its courses offered on the platform like Python, user experience design, JavaScript, among others. It currently operates 2 ChatGPT-powered tools, Coursera Coach and AI-assisted course building.
Now, if you want to have competitive products in the market, you also need to leverage this AI. So which means that you've got to teach these skills to those in your organization. So that's how we're kind of building this experience with AI Coach, Coursera Coach, to kind of help you not only learn more effectively, individualize to yourself, but also become more efficient in a certain skill. The other example is the product that we launched, which we call as Course Builder internally, or AI-assisted course authoring experience. It will very quickly help anybody to kind of very quickly mix and match and create their own course.
Another big edtech player in India, Unacademy, has launched an AI editor that enables users to create content called Cohesive. Cohesive AI aims to make content creation more accessible to anyone who writes, from personal writing needs to professional creators, marketers, customer support, sales team, and more.
We have almost close to 50,000 users right now which have signed up and are using it regularly. But over almost, I think, close to 100,000 users have actually visited the platform and tried out the platform. We basically charge around $9 per month per user pricing. If you go for the yearly plan, it's basically $9 per month, which adds up to $108. If you go with the monthly plan, it's $11 per month. Use cases of AI are going to be there in almost every industry. Education is going to be specifically sort of affected, as well as will be impacted by AI the most. One example of this could be creating, for example, curriculum through AI. So what we are doing, we are sort of experimenting with right now is, can we augment, can we make educators more productive by giving them tools? In Graphi, we are sort of building tools around AI. Basically, you can learn anything with AI. So we are almost building an educational chatbot. At Next Level, which is basically our job recruitment platform, we are building an AI interview layer.
The fear of mass displacement of workers due to AI is quite palpable across industries. Goldman Sachs in March published a report showing that AI could replace 300 million full-time jobs. Another report by Bloomberg News highlighted that if ChatGPT's technology replaces software engineers, India's 5 million coders will reckon with an AI job apocalypse.
I believe jobs will be affected. But that's almost saying when typewriters became stale because digital word processor had come up. We are already seeing completely new sort of genre of jobs which are basically only possible in AI first world, which were never possible before. One example of that is prompt engineering, for example. Another is AI artist.
Almost 61% of people will have to reskill over the course of the next 3 years or 4 years by 2027. And 2 million more new job roles, technology job roles, are going to be added at the same time.
That a lot of impact can be done through AI, and it can be done that there is a specific around 40% to 35% that can be generated using AI, because it reduces the cost of operation and improves the quality of use. In terms of negative impact, I don't believe as personally that there is a negative impact of AI. AI will help you with a monotonous, linear complexity. It's not going to help you solve complex coding problems.
According to Niti Aayog, AI technology can contribute up to $1 trillion to the Indian economy by 2035 by automating and streamlining routine activities in every industry. Now, if we talk about EdTech specifically, a research by Markets and Markets suggests that the global market for AI in the education sector is predicted to reach $3.68 billion by 2023. However, the concern still remains over AI. Global edtech firm Chegg signaled the rising popularity of ChatGPT was pressuring its subscriber growth and prompted it to suspend its full-year outlook, sending shares of the company 47% lower. With camera person Balbir Singh, Aishwarya Anand for CNBC-TV18.
Set up in 2019, Eka Mobility has some ambitious plans when it comes to delivering electric buses. Now, the company plans to double volumes every year for the next 3 to 5 years, even if that means compromising on margins. Here's a report by Jessilia Karyamparambil and I on the company's growth and challenges going forward. Take a look. India is a market of 18 lakh buses, of which 1.4 lakh buses are owned and operated by state road transport undertakings. Moreover, India is in dire need for an additional 2.03 lakh buses as per Convergence Energy Services. Understanding the growth potential in this space, players like Eka Mobility entered the electric bus market. They even won a tender from CESL for 310 electric buses, which will be used for intracity operations in Haryana, Arunachal Pradesh and Kerala as part of the National E-Bus Program Phase 1.
The contracts with the state transport corporations are still to be signed. We are awaiting the final LOAs from them.
While Eka Mobility has won the contract for a few government programs, it is very clear that it wants to venture into business with private fleet operators and clients. This is because the wait period for government projects can be a concern, so adding more clients will be the right approach to achieve its aggressive delivery targets.
In this coming year, which has just started, we are looking to deliver about 600 to 800 buses. We are also looking to deliver our first few thousand light commercial vehicles. And the idea is to roughly double volumes every year for the next at least 3 to 5 years. The demand will come from two sectors. One is the IT sector and the second is the manufacturing sector for transport of employees. Certain schools are also now starting to ask for it. There, the challenge is normally a school bus is not run a whole lot in terms of kilometers. But if they have specific ESG goals, then certainly an environmentally friendly product is something which helps. We are talking to several corporates as well as several schools. As I said, we hope to seed several such projects during this year. And we hope that increasingly our focus will be to focus on the private market in addition to the government market.
The restraining factor for the EV segment in India is not the market but the ecosystem. A healthy ecosystem will only be possible through regulations and incentives which encourage the industry.
The challenge was always the higher capex cost initially, which both the state transports and private customers are finding it difficult to pay. And incentives certainly would help in that direction. My only request is that the process for that should be seamless. Ultimately, these are designed to benefit the customer. And if there can be a mechanism worked out which is less bureaucratic, which puts this money in the hands of the customer when they buy this particular vehicle, then I think the job is done.
Incentives and acceptance will be significant for the $600 million market, which is slated to hit $2,766 million by 2030, as per PNS intelligence. So to enjoy a share in this pie, Eka Mobility is focusing on volumes rather than wide margins and profitability. In Mumbai with Jessilia K, Arundathi Ramanan.
All right, so that's as far as Eka Mobility's plans for delivering electric buses is concerned. But on that note, we're going to wrap up this edition of Startup Street. From Shruti, Arundathi and me, it's a goodbye and thank you for watching.